I can't be the only one who's wondering why we're seeing record corporate profitability at the same time we're seeing major layoffs. So in this video, let's break down what the heck is going on. Hey everybody, it's Brian from Life After Layoff, and today I want to talk about record profitability at the same time we're seeing record layoffs. And if you've been paying attention to the news, or you've been, let's face it, living life, you have witnessed this phenomena of corporations who are raking in the dough at the same time they're announcing these mass layoffs. And you're sitting there scratching your head thinking, wait a minute, how can you be laying me off at the same time you just announced in our town hall meeting and to the world that you achieved record profitability last year? So I want to walk through inflation and how these corporations are using it to their advantage, and whether or not we're experiencing a concept called greedflation and why that's potentially impacting the labor market. So let's talk about how we got here. So as you know, back in 2020, we had a major pandemic. It's no news to anybody at this point in time. We were all working very productively in 2019. Heading into 2020, things got pretty uncertain the first, second quarter of it, and then they shut down the economy. Then, of course, there were supply shortages, which is of no surprise since nobody was working and running these plants. Nobody was shipping the materials across the oceans. And so essentially, we had this gridlock happen. And the thing that was top of mind to me at the time was the microchip shortage. And the microchip shortage basically shut down entire industries, like the automotive industry, where they couldn't produce cars for months and months. Yet all this physical demand pent up. And then when the economy switched back on several months later, all the demand that had built up suddenly exploded. And that's why we had these major price increases. At the same time, our government was pumping trillions of dollars into the economy in the form of COVID stimulus. So they threw all this money at the problem that was essentially created by shutting down the economy in the first place. And then we started to experience runaway inflation. And at the same time, we saw everybody getting laid off, myself included. So people couldn't even buy the things that they wanted to or needed to in most cases. But that didn't stop corporations from raising prices. And of course, we all are well familiar with walking into the grocery store nowadays and seeing the price of groceries 20, 30, 40, 50% higher than they were just a few years ago. Same thing with the automotive industry. You can't walk onto a car lot without seeing cars that are 20 to 30% more expensive than they were just a few years ago. The housing market the same, and you can just go through all of the different industries and you can list out example after example. But at what point in time do we start to look at inflation being the result of corporate greed rather than part supply shortages because the economy turned back on? In fact, in 2022, things came screaming back, and it was a heyday for job seekers for like 5 minutes. And of course, that shut off just as fast as it started. And then we went into layoff season. But I have been thinking a lot about this concept of greedflation and how that has impacted layoffs in 2023 and here in 2024 as I record this video. So I wanted to go through a couple of data points and show you what it is that I'm seeing and get your opinion on it. So at the height of the pandemic and its recovery, if you don't recall, this is when we started to see this record inflation going up. And you've got companies like Procter & Gamble saying the consumer is willing to pay more than expected. So essentially what they're admitting is that they were pushing on the consumer to see how much they could get away with as far as pricing strategy. And what they said was, and again, keep in mind, this is 2022 at the height of the recovery of the pandemic. It says, as we've taken prices across the year, so far we see price elasticities, which is like, this is like just a really disgusting way of saying that they are taking advantage of the consumer beyond what the inflation rate is suggesting. It says the consumer reaction relative to the increases that we're taking to be about 20 to 30% more favorable than we would have assumed. In other words, people were still buying their products, so they just kept on jacking the prices up, saying, are they still buying it? Okay, let's raise it a little bit more. Okay, they keep on buying it. Let's just keep on raising it. That's basically what the CFO of Procter & Gamble is saying. And it says, the price increases are more than enough to offset the rising costs. So what this is telling me is these companies are pushing this inflation because they have become very greedy. So these companies are getting high on the hog off of all of us even beyond the rate of inflation or what their prices or their costs would suggest. And keep in mind, this is across the board. This is almost every major corporation, almost every major industry has had this same philosophy. They're looking opportunistically at this as a chance to raise prices beyond what they normally could have in a normal market, and people just accept it. And as we look at PepsiCo, they're saying the exact same thing. This is the CFO of PepsiCo talking back in 2023. This is halfway through this is April of 2023 about the exact same thing.
Yeah, I mean, inflation has clearly come down from where it was a year and a half ago. But one of the things you have to keep in mind with our results is we tend to forward buy commodities about 9 months in advance. So from the time that inflation starts to come down, it takes the better part of a year before those roll into our numbers. So from a PepsiCo perspective, we're still looking at pretty high inflation for the balance of this year. Hopefully, we'll start to see it moderate in 2024. It'll get a little bit easier in the back half, but we'll still see pretty good inflation for the year.
To talk about your ability to pass through price increases, are there products that you feel confident that the price increases can continue versus ones that you're like, I got to wait on that one?
Well, I mean, if you look at us, we're a company that has $23 billion brands. And to us, $1 billion brand means it's a big brand. It's a powerful brand. Given that we've got such a large number of big brands and we invest so much in them as we have, in particular over the last few years, consumers generally look at our products and say, you know what, they are worth paying a little bit more for. While they may not be able to afford the big luxuries in life, for us, a little bit of an affordable treat, consumers generally feel good about that. So in general, the stronger the brand, the more the consumer is willing to pay a bit more for.
Basically what he's saying is that he's completely taking advantage of consumers because while they might not be able to afford houses and cars, they're willing to spend more on Doritos and Pepsi products, and we can screw them because we can. So to me, it comes across as extreme greed and corporate smugness, and it's really off-putting. But before you go off saying that all corporations are worthless, not every company is so bad, and not every company is taking advantage of the consumer. And let's take a look at Arizona Iced Tea, because I think we need to call out the companies who are behaving properly. And this is the CEO and the owner of Arizona Iced Teas, who has managed to keep their product price at 99 cents. If you go into a gas station, even to this day, the product has not gone up in price to match inflation or to beat inflation. There's no greedflation here. And this is what the CEO says.
Why not increase the price and therefore increase the profit?
We're successful. We're debt-free. We own everything. Why? Why have people who are having a hard time paying their rent have to pay more for our drink? Maybe it's my little way to give back.
Would you definitively say that you'll never raise that 99-cent price?
Never. Not in the foreseeable future. You know, we're going to fight as hard as we can for consumers.
So obviously the difference in philosophies here is very drastic. One is doing the right thing, and the other is chasing after profits at the expense of loyal consumers. And if you've gone into any fast food restaurants over the last few years, you've probably noticed the same thing, where everything has gotten much more expensive than it was just a few years ago. And the food has not gotten better. In fact, things have shrunk. You've got shrinkflation on top of all of this. But I personally go into a place like Chipotle, and the amount of portion that they give you has continued to shrink. The quality of the product has gone down. The restaurants are disgusting. When you walk in, there's crap everywhere on the floors. I've seen, like, my local one has like flies flying around in it that's destroyed. It's just really gross. And they are charging, it's like in my area, it's something like, to get like a steak salad, it costs something like $13 or $14. And I'm sitting here thinking to myself, I could go to a sit-down Mexican restaurant, get the chips and the guac and all that kind of stuff, and have a better quality meal for, at very least, the same price, if not cheaper, and enjoy myself a lot more. And if you don't remember, there used to be a dollar value menu at McDonald's and other fast food restaurants. That's all but disappeared, and they replaced it with these they call it value meals, that are much more expensive. So you can't even go in and get a dollar cheeseburger anymore. And companies like McDonald's have realized that they did push too far, and they've lost the low-end consumer who no longer is frequenting those restaurants. And let's face it, that was probably their bread and butter for a long period of time. They got greedy. And so now they're trying to incentivize people people through new value meals that are supposed to, first of all, they're temporary, they're not even a permanent thing, and they're trying to entice people back with stuff that used to be on the menu for even cheaper, and they're trying to act like they're doing us all a favor. But what that tells me is that they've just gotten greedy. They've just raised prices beyond because they could take advantage of you, the consumer, and they had no shame about it. Companies like Aldi and Walmart have announced thousands of their products are going to be reduced in price. If you actually pay attention to what they're doing, they've raised the prices up to here, then they dropped them down to here, even though they used to be down here. So you're still paying way more than you should be, and it's probably all due to greedflation. So what we're seeing basically is record profits. So this is a chart that tracks corporate profitability from 1948 all the way to current day. And you can see we are at near record levels of corporate profitability. It's no wonder if companies are taking advantage of the consumer that you would see this chart exploding the way it has, especially from 2020. You can see this dip in the pandemic, but look at the explosive growth since then. This is what I'm talking about, this explosion of corporate profitability over the last 3 to 4 years. That's the greedflation. And of course, we see Amazon reporting a $30 billion profit in 2023. That's not surprising. Everybody's been ordering stuff from their house. Amazon's just exploded in growth. And this is not a unique story. You can go across and kind of do a who's who of major corporations, major manufacturers, consumer goods, and you'll see the exact same story. But at the same time, they're also announcing record layoffs. Amazon is having these massive layoffs, and they keep on having round after round after round. And while the latest layoffs might be relatively small, they've laid off tens of thousands of people over the last 6 to 8 months. And so this is continuing to happen. They're continuing to look at their business groups. Now, keep in mind, Amazon's a massive company that has like 1 million plus employees. So 100 people is really just a total drip in the bucket. But nonetheless, a lot of people have lost their jobs at a time when they're announcing corporate profitability at an all-time record or a $30 billion profit. The same thing goes for Ford, where they posted a fourth quarter loss, but overall posted a $4.3 billion profit in 2023. Now, this also comes at a time when they had announced another round of layoffs for salaried workers and a lot of hourly workers at the same time as they're kind of adjusting things. But again, profitability and layoffs seem to go hand in hand with these companies. And if you look at layoffs.fyi, we can see the same period of time, this 2023 record profitability, and look at the number of layoffs that we have seen. So obviously we peaked in the beginning of 2023, January, February, the first quarter of 2023. You can see a massive spike in layoffs from actually really mid 2022 all the way through the first quarter of 2023. And this was obviously the pinnacle. And the good news is that it has slowed down considerably. Now, this is just for tech. This does not take into account non-tech related industries, but nonetheless, we can see a major slowdown through the rest of 2023. I think they exhausted their layoffs, but then again, corporate earnings come out, and we've got January, a spike in layoffs, and we've seen a higher degree of layoffs over the first half of this year than we did the last half of the previous year of 2023. So the trend is still somewhat concerning. We're still seeing a high degree of layoffs at a time when companies are announcing these record profits. In my personal opinion, what's happening is that companies have a shelf life. They're designed to be cannibalistic in nature because there's always this incessant need by the stockholders, the shareholders, to return profits at a very standard or steady clip. And they always want to see it increasing. And in some of these mature industries, it's not possible to achieve 20 and 30% year over growth year after year after year. And so they used the pandemic as a great excuse to raise prices on all the consumers. And then when they realized that they weren't going to be able to continue to do that for a long period of time, they started looking at other things like layoffs. It's kind of like the rise of the Roman Empire. At some point, even the mighty Goliaths will crumble under their own weight because they can't keep on turning the same kind of profit, and they bloat and bloat and bloat, and eventually I think that they'll all implode. So I think that that's the main reason why we are seeing these layoffs happening at a time when you have corporate profitability. And it's not because these companies can't afford to keep these people on payroll. It's that they're constantly restructuring and tinkering with to try to squeeze another percentage or two of profitability out so that they can keep their jobs and they can keep those huge bonuses coming. And the unfortunate thing here is that the people who are getting laid off are oftentimes the same people who they consider to be customers. And that might be a very short-sighted approach to how they conduct their business. I think that's one of the major reasons why we're seeing layoffs at a time when we have record profitability. So what do you think? Is it greedflation that is causing all these issues related to inflation? And furthermore, is that directly impacting layoffs? And taking that a step further, are there any brands that you no longer support because they've just gotten too expensive and you're wondering whether or not it's greedflation at this point in time? Because if you ask me, a lot of these companies became very greedy at the expense of their customers and their employees. And we have a lot longer memory than they give us credit for. Anyway, I thought this was a really interesting concept and something that I had been thinking about for a long period of time, trying to make sense of why we're seeing so many layoffs when companies at the same time are announcing record profits. Anyway, appreciate you watching. We'll see you on the next one.